Good morning to all traders and welcome to this Friday's market insights videos on FX majors. Obviously, it is a Friday. Today is the last trading session for the week, so we can expect some end-of-week flows regardless, whatever happens with headlines and in the markets. However, we do need to pay attention to a number of things that have happened since yesterday or even during the trading session yesterday. The most important being, and that what also supported risk appetite, is that US banking and also market regulators modified rules that prevented banking entities investing or sponsoring hedge funds or private equity funds, as the FT said. These rules were contained, banking rules were contained in the so-called Volcker rule. Okay, and what now happens with these changes is the rules are easing, okay, on derivatives, and this is expected to release around 40 billion, at least for the time being, in capital for the banks. And obviously, we've seen stocks rising as well, being driven by the banking sector and financials this time, okay? Now, the other pairs mainly, I mean, we've seen the dollar remaining a little bit stronger on the session, but we really need to pay attention to something very interesting today. And that is going to be what the situation is between the US and China, because only yesterday the US Senate passed a bill targeting officials in Hong Kong who undermine the city's semi-autonomous status. Now, well, that seems like a retaliation to China, against China to me, so we might see China coming back probably on Monday, because we're on holiday there, with a response to that. So I would pay attention what happens on the escalation front. And last, well, euro, as I said, I was speaking about the euro a little bit earlier. It slipped lower. It was a little bit weaker against the dollar after the ECB said they would establish a facility to provide liquidity for the single currency to other central banks outside of the bloc. Okay. Now on euro dollar, we talked about this becoming a Y wave, right? And it seems to be working quite fine so far. We call this a W, and we'll call this an X, and we're expecting an ABC. This is going to be a double zigzag, if you recall, right? So because this is as an ABC as well. Now, what I see over here on the RSI is a divergence, right? So that suggests that we might see prices start moving higher. In this case, I believe this is going to be wave A, okay? So we should be getting wave B soon, and then wave C. Now, the truth is that, and I'll go a little bit back again onto that. The truth is that this could be 1, 2, 3, well, wave 4 could come in a triangle pattern over here, and then we're going to get 5. That would be wave A, and then we're going to get B and C, okay? And if we take into consideration that we didn't break below this low, it might be possible that we're going to get a 5th wave down, right? And that will be it for the euro dollar. In case, of course, we start moving higher from here, then that would probably suggest that we're on wave 4. We had the ABC done, and we're moving up impulsively. Because, I mean, both of those moves can be considered as impulsive as well as corrective, okay? So I will pay attention to, well, taking out this fresh low first. If we take that out, it means that this is not an impulse to the upside, at least at this moment, okay? Now, on dollar yen, we talked about this moving higher as well last week. Actually, why am I talking about last week? We saw that on Tuesday, if I'm not mistaken, right? Either Wednesday or Tuesday. So I was looking at this. I'm still looking at this being a triple zigzag, right? Let me just go a little bit further out to have a better view, which means that we're going to get WX, YX, and a Z, right? So wave Z probably going to get 109.80. 80 something at least, and then perhaps start moving lower once again. Now, this could easily be, you know, an ABC down here as well, which would suggest that we're going to move higher. So if we break the 109.85, look for 101.1170 and 101.1227 after that as targets. If we break above that level, it means that we're moving impulsively to the upside, right? Otherwise, for me, any upside move would be considered as part of the correction. Okay, now since we started moving up after this nice signal over here that we saw on Tuesday, we had waves 1, 2, 3, and 4 done. and I'm looking at prices to start moving higher a little bit again to complete wave A. Then we're going to probably get a B and then a C again, impulsive to the upside. We want to take out the 107.69 at least, and then even perhaps move to the 108 to complete this either first impulsive move to the upside or the second move, impulsive move to the upside, that are going to be part of the correction, okay? And then that will be it as well for this one. The other scenario, of course, is that, well, yes, we had that. We're going to go down to 103 or so, 105.20 or so. That would mean that we're going to get an ABC perhaps over here. That would be 1, 2, 3, 4, 5. ABC, 1, 2, 3, 4, 5, something like that. So that would be an A, B, and a C for wave B. And last, dollar against the Swiss franc. A very nice opportunity here as well. We're talking about this opportunity being a W, X, and Y. Still, we are waiting for wave 5 down here, right? Do not forget that. We had 3, 4, and we're waiting for 5 with A, B, and C over here for W, X, and we're expecting wave Y for sure. Now we're in the middle, in the midst of wave X. We've done waves A and B, at least it looks like it. A, B, C over here, 1, 2, 3, 4, 5, and we're waiting for 1, 2, 3, 4, and 5. This is supposed to end, well, anywhere above the 95.56 because that was already taken by wave A. So I think we're going to go closer to the 96, okay, perhaps even a miss or a takeover again on that one, or even a false break, and then start moving lower. Now, the thing is that I see a very nice bearish signal here on the RSI, okay, and that suggests that we might see prices moving a little bit lower. So as long as we are above the 93.76, we can still look at this as, well, that could be a W, X, and Y. Like that could be a double zigzag, and wave B could come down here purely because of that signal and then move higher. So don't be surprised if you see prices moving below the previous low of 94.21.